just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and good afternoon. You're watching Countdown right here on Bloomberg Quint Live. A day of consolidation, a breather from the market up move that we've seen over the last few days. The Nifty stands still closer to about 11,335. We'll take you through the internals of the markets for the headlines. It's a volatile day of trade, post which the afternoon session seems to be more quiet, but the Nifty still trades around that 11,300 mark. The Nifty Bank has also managed to hold on to gains but is off the day's highs. The index scaled an intraday high of 29,000 today. HCL Tech is the top loser on the Nifty. The company has signed an agreement to acquire US-based Strongbridge Envision for a cash consideration of $45 million. And crude prices have surged to their highest level in 2019 due to supply curbs from OPEC coupled with falling stockpiles in the US. Good afternoon, Neeraj. We've taken a pause, a sort of breather from the kind of rally that we've been seeing over the last few days, and it's not all that bad.
Yeah, but we were talking about this in the morning, right? That at some point of time, the pauses that we were talking about in the morning will translate into an actual pause. Yeah. Right, too early to talk about it as yet, but yes, we do have a pause in the session today. It's a flat day of trade, not without gyrations. Actually, I want to first get the volumes up on the screen before we talk any further, because the last few days the volumes have been, well, stratospheric, to be honest. In today's session, yes, the F&O volumes would be high because today's the Bank Nifty and the Nifty weekly options expiry day, but the cash market volumes leave a little bit to be desired. Still about an hour and a half, but usually at this time around the last few days, we've nudged that 28,000 crore mark and end up well above the 30,000 crore mark. In today's session, we may just fall a bit short, so the participation is slightly lower in the session today, but that's okay. Every day can't be a Sunday, as they say. Bring up what's happening to the market breadth first very quickly before we get to the heat map and show you what's happening on the Nifty. Again, the breadth similar to yesterday. Actually, yesterday was a lot more adverse, but today, after opening up a bit and going to our 2:1 in favor of the declines, we've just come off a little bit as well. Let's wait and watch what happens during the course of the day. Now, Devi, I'll speak about all of these. Let me just get you the heat map and show you what the large caps are doing. Even Stevens, again, similar to yesterday's session. Select PSUs, not all, select PSUs have gone off the boil today. So Power Grid another 3.5% lower. HPCL about 1% lower, but aside of that, you don't necessarily see PSUs as being the key ones. And a spate of banking gainers, ICICI Bank is the one that pulls back today, so about 1% lower in the session. A standout more is also what's happening to IT. Now, I don't know if it's because of the currency appreciation or otherwise, but Kotak Mahindra, TCS, HCL Tech, all of them are looking wobbly in the session today. Bajaj Finance, one of the principal gainers, is down to about 0.5%. What's helping the index? Select banking names like IndusInd Bank and Yes Bank, those two right at the top of the pile. NTPC continues, so another 3% higher for that one. Some gains for a Vedanta, while losses for Hindalco. So it's a mixed bag really in the session today in the large cap space. No clear winners, no clear losers, just that IT has taken a back seat. So if there's one theme that is playing out, that's Nifty IT pulling back. I don't know if it's playing out in the mid cap space or are there other dominating movers.
Well, there are individual stocks in the way they're moving, but Neeraj, interestingly, we still got Reliance, which is yet another day. While the gains are a little more subdued, it seems like it's still gradually adding on more weight as the day passes. So the last 4 days actually Reliance has been in the green. But for the mid cap and the small cap space, individual stocks, and like we highlighted, the index is not doing a whole lot much. So stocks which are actually in focus on the back of some news. Jubilant Foodworks, for one, promoters exiting some stake at a discount, but the stock price is not reflecting that. Lemon Tree, on the other hand, a non-binding agreement with key hotels. The stock's up about 1%, and Jet Airways, 5 more aircrafts getting grounded for non-payment to lessors. The stock's down about 1% odd. Other stocks on the move and heavy gains in an Indo count, and this is not just today's move. This move has been happening in the stock since the last 4 to 5 trading sessions, taking the 7-day tally to about almost 50 to 60% now for Indo count. Indiabulls Real Estate is up 7%, and then you have a Himmat Singh Seed, which too has continuously been moving up. Volume buzzers, JM Financials is doing okay for itself. Star Cement adds on weight in today's session on the back of heavy volumes, and DLF is one stock which has moved up too. Remember, there was an upgrade coming in on the stock price, brokerage upgrade coming in on DLF. The stock has been moving up since then. Losers in trade, a stock that has been continuously adding long position, seeing buying momentum building up. Today sees some amount of profit taking. So Manpasan Beverages for one is down about 6.5%. And from the ADAG stocks, you have RCOM and RPower, both of them down about in trade today. But let's take a look at what's happening in the futures and options space. It's the options expiry, weekly options expiry. So it's going to be an interesting play in the last half an hour of trade. Agam joins in for more details. Agam.
Well, we are looking at a little bit of a pause after the kind of gains that we've seen over the previous few days for the benchmark indices, and that actually explains the reduction in the change in OI that we are seeing for several of these stocks, or rather indices. Unwinding coming through for something like the Nifty futures, which is marginally in the red, and it is likely the same for the Nifty banking futures too. So let's pull up that plate as well, and we have a decline of around 5% as far as its open interest is concerned. In terms of change in the wicks, not too much there either, at around 15.3, and it's been a fairly quiet session, and that's the reason why we aren't seeing too much change in the wicks. But what the traders have taken this as an opportunity is to write the 11,300 put, which is a little bit of a surprise, which means that they want to and they intend to defend this particular level, at least in today's day of trade. Moving on to a bunch of stocks, we have Jubilant Foodworks. Of course, a lot of news flow with its foray into another cuisine and a new QSR. We're seeing some strength coming in there, even though it's given up most of its gains on an intraday basis. It's 23% increase in OI. Reliance Capital is the other one, but on the losing end. Considerable amount of selling coming through with a 24% increase in open interest here too. And the last stock that I want to address is PC Jeweler. A very sharp up move coming through, up 8.5%, with open interest increased by as much as 23%. So there you have it, mixed cues coming in today's day of trade, even as the underlying or the benchmarks remain flattish.
Right, Agam. Thanks a lot for that. That's the FNO trade setup as of now. Let's begin with the market voice. Shibani Sircar Kurian of Kotak Mahindra AMC is joining us on the show right now. Shibani, good afternoon to you. An interesting move in the markets over the last few weeks of trade. We've actually been leading the move despite what the rest of the global markets have been doing, though off late they too have started to see an up move. But is this move independent of what we're seeing in terms of global cues?
Hi, good afternoon. So the move that we've seen over the last few weeks, there are two factors in my opinion. One, of course, that market somewhere is also factoring in that there is likely to be an outcome of a stable government in May. So that's something that possibly is getting factored in. And also globally, we've seen that liquidity has clearly improved. There is a fear, there was a fear earlier of liquidity tightening, but clearly that fear has gone away. If you look at global inflation levels are well under control, and there is now a possibility that central bank action remains fairly benign, and that is also adding to the global liquidity flows that are that's helping India. So I think it's basically a combination of both, where we've seen the markets really move up over the last couple of weeks, both global markets as well as India. And like I said, from an India specific perspective, it's possible that markets are now factoring in a more stable government outcome in May. The way to look at markets is that, while there could be a possibility of a stable government, one never knows till the outcome is actually known in May. So therefore there could be, and one should be prepared for some degree of volatility. Post May, our view on markets are fairly constructive. We do believe that there is a situation where earnings growth trajectory does improve, which means valuations become more favorable, and there are definite pockets of opportunity in this space. So that's how I think markets are moving at this point in time, and we'll have to see how things pan out over the next month and a half.
Shibani, this big up move in banks, do you think is slightly overdone right now?
So financials and specifically banks has been a segment where we've been extremely positive, and that's been a substantial part of our portfolios. And within banks, where we have been positive has been private sector banks, specifically the retail private banks, where we felt that these are more structural compounding stories, and therefore they have been a part of our portfolio for a very long period of time. Incrementally over the last many months, we've also increased our weight towards the private corporate banks as well, where we have seen incrementally signs of stability emerge on the asset quality front. Also in this banking sector scenario, one must note that there has been a significant shift in market share from PSUs to private, especially on the loan side. Deposits have been lagging a bit, and therefore there has been this scramble to raise deposits. Therefore banks which have a strong liability franchise have fared better than others in this kind of an environment, and therefore these are the kind of banks that we've looked at, those which have a more granular retail deposit franchise, those who have the ability to improve their liability base with higher CASA or low cost deposits. So financials as a space, we continue to remain fairly positive. While there has been a sharp up move over the last few months, there is still significant opportunity as this market share shift takes place, now more so accentuated on the deposit side, where we've seen deposit growth picking up for a lot of the private sector banks as well.
Shibani, the underperformance that is, Neeraj here, good afternoon. The underperformance that we're seeing in the technology space, do you reckon that will continue? Hi. The currency gains notwithstanding,
yes,
just the fact that the market seems to be in the high beta mode, does that naturally take the sheen away from that space?
To some extent, yes. So incrementally, we believe that this year is not going to be as easy in terms of technology stocks as it was last year, when you had the currency tailwind. Demand growth was on the mend, and therefore margins were largely stable. So if you look at technology in two parts, one on the growth aspect and one on margins. So growth, as of now, commentary from most of the management seems to suggest that growth is fairly okay and possibly on track. Deal wins have been fairly good. We have to see how it pans out in the second half of the year, and if there is any incremental impact of slowdown either in Europe or in the US economies. But as of now, it does appear that growth is fairly okay and would possibly be on track to at least meet last year's growth from an industry perspective. The issue would be more on the margin front, where clearly the cost of doing business has gone up. You are seeing higher costs as deals ramp up in terms of subcontracting costs, etc., and visa costs, higher protectionism, etc. Also, like you clearly pointed out, the currency tailwind is absent, which means that there could be certain margin pressures that companies would have to face. Valuations are fairly still okay. So I think at the margin, one needs to be a little stock specific in the sector. It's not going to be a one-way street as it was last year. And therefore, in this kind of an environment, our preference has been towards the large cap IT names vis-a-vis the mid caps.
Okay. And maybe that's the safer bet to do as well. The other one is this whole bounce back, Shibani, that we seem to be seeing in select, actually, yeah, save for maybe what's happening to capital goods, the economy facing spaces have shown a bit of a bounce. Cement has done that. We've seen that happen in the core infrastructure plays as well, the EPC companies in particular, and some cap good names, if not all. My question is, do you reckon that this is broad-based, or is it very idiosyncratic in that cement is bouncing because they were beaten down hollow, infrastructure or EPC companies are doing well because the order flow is just so strong, and post last couple of weeks, the expectations of the policies continuation is also there. Is it very specific and sector specific, or is it that the space at large will continue to do well?
So our belief is, in terms of some of these domestic cyclical names, there is a possibility that the space does continue to do well over the rest of the year as well. So one, of course, is the outcome that you see if there is a stable government and expectation that the public spend on infrastructure, capex continues post the election. So that is one key trigger. Now, you specifically mentioned, for instance, a sector like cement, clearly a beaten down sector, where over the last year we've seen that volume growth was strong, but pricing power was missing pricing, specifically because of a few large players trying to gain market share and therefore keeping pricing low. That situation seems to have completely reversed, where over the last month we have seen significant improvement in terms of price hikes, and it does appear at this point in time that the price hikes are sustaining. If the demand growth also sustains, especially post-elections, this could be a sector where you will actually start seeing improvement and sharp improvement happening in profitability, so as long as costs remain under control. So that's one space where we have been positive on. Even on the capital goods infrastructure side, it's going to be a slightly longer term kind of a trend where you will start seeing improvement happening on order flows. It's not going to be very near term and immediate where you start seeing a very substantial uptick happening on the private capex side, but clearly if you have a slightly longer term horizon, you are seeing signs of improvement, especially in terms of capacity utilization, some improvement in order flows, and then, as I said, if a stable government scenario does emerge, then the public capex spend does continue. So these are two segments where we have been positive on, and believe that structurally over the next year these could be pockets of opportunity as well.
Right now, according to you, after this up move that we've seen, where is, on a comparative basis, a bigger potential? Towards something that has not probably contributed in this up move, or even though it's contributed, it's probably been a laggard in a space that has run up a lot?
You know, the way we've looked at the market and what we've seen over the last year, clearly the Nifty has been the one which has been leading the market, and the broader market has underperformed. Now we've believed that, and this is something that we've been saying now for a while, that there are stock-specific opportunities that are emerging on the mid-cap space. I spoke about some of the sectors we are positive on, and within those sectors, from a bottom-up stock-specific approach, there are certain pockets of opportunities that are there. Our focus is clearly on picking stocks which are high quality and high growth. Growth at a reasonable price is our investment philosophy, and that's what we are trying to put to play when we are approaching stocks, especially in the mid and the small cap space. But even today, if you look at in terms of valuations between mid and small caps vis-a-vis the large caps, there is definite opportunity there in the mid and the small cap space, which we are exploring at this point in time.
Okay. Shibani, anything that you are not constructive on? You mentioned that mid-cap IT is not something that you would choose, but I guess that is in relativity to large-cap IT. Is there something that you believe will be a stark underperformer due to earnings, due to the cycle turning unfavorable or otherwise?
So the sectors that we have been cautious and we continue to be cautious on, one is telecom, where we believe that the improvement in terms of fundamentals are still going to take some time. So we continue to remain cautious on the telecom space. Metals is something also which is seeing a fair degree of volatility, and overall we are not as constructive on metals as some of the other sectors that we have mentioned, and fairly cautious there. In terms of metals, there are too many moving parts and too many drivers, so it's very difficult to really take a very structural call on that sector. So these are some of the spaces where we continue to remain a little cautious. Even on the NBFC side, we are very stock specific. We believe that the worst of the NBFC crisis is definitely over, but if you look at cost of borrowing for many of the NBFCs, it still remains very elevated. In fact, while policy rates have come down, the cost of borrowing for a lot of the NBFCs have not come down, which means that growth incrementally is likely to see a slowdown. So even if there is no credit risk or a credit event, you will structurally see lower growth in that space, and therefore we are fairly cautious there as well.
All right, Shibani, great to hear from you. Thank you so very much for joining us this afternoon. Market opinion coming in there. From markets to crude oil, oil prices have surged to their highest level in 2019 on the back of supply curbs from the OPEC and declining stockpiles in the United States. Is there more, or will the rally be short-lived? Let's pose these questions to Vandana Hari of Vanda Insights. Vandana, thanks very much for taking out the time. From lows of 50 that it hit in the second half of December, it's slowly but steadily been creeping up for Brent crude. If you take a look at now, the last approach being towards 68 and even 70 could be around the corner. Are we looking like we could head back to those highs that we had witnessed earlier on, those levels of 80, 85?
Good afternoon, Devina, and thanks for having me on your show. Yes, I mean 70 is within sight, right? You just showed on your screen Brent is sitting just above $68 now. So could it go to 70? It could. I think a bigger question probably to ask ourselves is, are we from here going to see a continuous rise beyond 70 and even to 80 like what happened last year? I think there's a couple of reasons I don't expect that to happen. First of all, you have to keep in mind that last year's highs that were touched at the start of October, a lot of the premium in the crude at the time was because of a fear that large or all of Iran's crude exports are going to be wiped out from the market because of U.S. sanctions, and that didn't quite happen. And that's not expected. That fear premium is not expected to come back into crude. And the second is, of course, you have Trump and his tweets. He tweeted what was like a week ago, right, when Brent was touching 67, and he came back with this tweet for the first time this year asking OPEC to take it easy. I believe that pressure will remain on OPEC. I believe the Saudis, irrespective of what they say, openly to the press and officially, that they are dedicated, committed to these cuts, and which they are, no doubt. But Saudis are cutting way beyond what they had committed to cut. So I do believe OPEC and the Saudis will remain under some pressure as well from President Trump.
So what is the near-term big threat that one needs to watch out for with regards to crude oil prices, whether it be supply coming in, whether it be stockpiles falling in the U.S.? What's the bigger concern now?
So as we saw this week, a major drop in U.S. crude stocks and a big one in gasoline stocks as well does seem to have sparked off the latest rally. But, the U.S. weekly data can be quite fickle. One week we see stocks dropping. The next week we could see them rising. And, but I think what you need to bear in mind is fundamentally what is affecting crude. And there a few things have turned decidedly bullish, as you've just mentioning in your introduction. OPEC is cutting. And not just that, in February, the second month of their cuts, they've already come close to the 100% of the commitment that they had made to cut. The Saudis are cutting beyond what they needed to. And if you look at the three countries, Iran, Libya, and Venezuela, which were actually exempted from the current cuts, they have all dropped quite precipitously compared with what they were pumping last October. So overall, I was, just crunching some numbers. Actually, OPEC had pledged to remove 800,000 barrels per day, but if you count Iran, Venezuela, and Libya, they've removed more than 1.6, 1.7 million barrels per day from the market versus last October. So that's supply is definitely tightening. However, I'm not extremely bullish. As I said, I think U.S. production growth is continuing quite strong. There are still clouds of worries over economic growth still hanging over the markets. I think that will continue a little bit of bearish pressure. And then you have, of course, Trump and his tweets, which will probably keep OPEC in check as well.
Okay, Vandana, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Thank you.
That's Vandana Hari of Vandana Insights with her thoughts on what's happening to crude and otherwise. Just looking at the markets and the way some stocks are reacting. Firstly, stocks which are trading at new highs include the group stocks of the CAC group. So Spencer Retail is up 7.5%, 166 and counting. This is trading at days highs for itself. Good smart move there. Wonder what CAC Ventures itself is doing. That stock too should come up on your screen. Was 11% the last time I checked, 8.5%. So this one is trading at new highs. So the Sanjeev Goenka group stocks are doing very well for themselves. Solara Active is up about 4.5%, trading at new highs. Muthoot Finance has gained some ground, trading at new highs. So these 3 or 4 names are certainly revving up the heat in the session today at the broader end of the spectrum and trading extremely well. Not necessarily just trading at 52-week highs, but doing very well in the last few minutes of trade include Max India, Stride Sashun and Wokhard. All of these in the green. but just that they have perked up a little bit in the last few minutes of trade. So some upsides that have come in. Actually, something happening out there for some of the pharma names, because even Jubilant Life is about 4.5% higher. So strong showing by that one in the session today. Again, a spike that has come in the last few minutes. We'll talk to our technical experts about that in a few minutes from now. But strong moves for select pharma names in the session today. Let's talk about the stocks in news now. 2 or 3 names that you should monitor. Firstly, Lemon Tree has entered into a non-binding agreement to acquire one of its peers, Keys Hotels. The deal, subject to due diligence, will fetch Lemon Tree an additional 21 hotels. Mishika Parak joins us now with the details. Mishika, what does this mean for Lemon Tree, if, of course, this deal goes through?
Yes, so there's big news coming from Lemon Tree today. Lemon Tree signed a non-binding agreement to acquire 100% stake in Keys Hotels. Lemon Tree will get around 21 hotels and close to 1,900 rooms in 19 cities post this acquisition. Currently, Lemon Tree Hotels operates 54 hotels with around 5,400 rooms. We had a word with the CMD of Lemon Tree, Mr. Patanjali Keswani, and what he had to say is post-acquisition, they will own 1.5% of total India inventory of branded hotel rooms, and that this business should fulfill certain expectations of accretiveness for them. We also had a word with Amit Agarwal, an analyst with Nirmal Bang tracking Lemon Tree, and he said that the acquisition looks good, but there is still more clarity to come in terms of the financial aspect of the deal. And if the company adds a lot of debt, that might be a concern given their earlier commitments. JP Morgan's view on the deal is that acquisition should add around 8 to 12% to FY20 estimates. There is sufficient room for transaction to be at a discount, and the acquisition should be value accretive for Lemon Tree.
Okay, thanks a lot for that. Let's wait and watch though. We don't quite know what's the debt levels, etc. And of course, we don't quite know if the deal will get consummated in the first place or no. A minor uptick in Lemon Tree Hotels in the session today because of the up move that the stock has had. If you look at the ANR function, that will show you that the return potential for Lemon Tree now is a lot lower than what it was maybe a few days back. Negative return potential despite the fact that it has got all buy calls for itself. The next stock in focus is from the ADAG Group. Nikki Mitchell Johnson to talk about how Reliance Infra's latest deal to sell its stake in a highway project could help it with its debt levels. Nikki.
Well, the stock isn't moving too much, 2.5% downtick rather, but then the company has inked a pact with Cube Highways for reducing the pact. Is signed for 100% stake sale in Delhi-Agra toll road, and the enterprise value for the stake sale is around 3,600 crore, which includes an equity of around 1,689, roughly 1,700 crore. And additionally, NHAI claims of around additional 1,200 crore will be filed by the toll road, which will percolate down to the company financials. Effectively, we are looking at a number of around 4,800 crore. And with this deal, Reliance Infra debt is expected to reduce by 25% as per the filing, which comes to a figure of less than 5,000 crore. Now, if you look at the consolidating picture here, as of September 30, the company's consolidated debt stood around 16,900 crore. But looking at the equity value of around 1,689 crore, this is just going to reduce the debt by as much as 10%. And the press release remains silent as on what will be the timeline when the transaction is expected to complete it, and the money is expected to percolate down in the financials of the company. In terms of the rating stance, earlier CARE Rating has moved rating to Reliance Infra to issue a not cooperating category. It says that a number of times the rating action has been tempered on account of the loans and advances which have been extended by Reliance Infra, and the delay in a receipt of money from both arbitration awards and regulatory assets essentially have impacted the financial profile and the liquidity profile of the company. So net-net, even as the press release says that it's going to be a 25% debt reduction for the company, the equity value only comes down to 10% of your overall debt. And again, the release remains largely silent as to when this transaction is expected to be completed. Back to you guys.
Right, Nikki, thanks a lot for that. We'll watch out for that stock. Meanwhile, before we go ahead and talk about some ideas from Gautam Shah of JM Financials, just to pull up Bank Nifty. The Bank Nifty once again has rescaled 29,000. in today's session, and again starting to perk up. And I dare say HDFC Bank too would have perked up. If you could have the intraday chart of HDFC Bank, that would probably give you a clearer indication as to how the stock has started to move. It's just starting to make
the Bank Nifty weekly options expiry.
Yep, on Thursday afternoon.
Tell us about the pricing of the options as well at some point of time, Devina, because I'm sure that would have that would be reflecting as well.
It's an eerie similar picture to every almost every options expiry that we have.
Well, certainly a point to ponder, and for anybody who wants to know more about this, there's a story that's filed on our website as well. Do log on, search by the Nifty Bank, and the story will be there on the website. You can read it. How the options or how the Bank Nifty could result in, that's the title of the story, right?
The movement of the Bank Nifty resulting into last-minute option gains.
Okay, do watch out for that one. Meanwhile, since we are talking about the Bank Nifty and levels, Gautam Shah of JM Financial expects the Nifty to scale the 12,000 mark even before the election results are announced. Speaking to us earlier in the day, Shah said that the risk reward on the Nifty Bank is not justified at the current levels post a 2,500 point rally, however.
The best of rallies come after a period of real challenge, and I thought the period of December to February was a real challenge at the markets because you had the Nifty trade in a band of about 350 points. You had a lot of crisscross action. Market participants were pretty confused as to which way the move is going to happen or the snap out is going to happen. But I think we were pretty clear all along that it was a phase of consolidation. The market was fed with a lot of bad news to end with the geopolitical developments. And despite that, the Nifty managed to respect support levels. And I think that gave us an indication that this market eventually wants to break out on the upside. So we were pretty prepared when that move started to happen from around 10,900. And we were working with a bare minimum target of about 11,350 to 11,400, which is where we are right now. So it's been a nice 500-point rally in a very short span of time. And as the Nifty gets closer to 11,400, I think you could see the first bout of profit booking. So when I say consolidation, it could just mean sideways action for a few days. I think once that sideways action gets absorbed, once the weaker hand selling gets absorbed, you should see the next leg up. This uptrend is just going to continue for many weeks to come, and we are working with the Nifty actually going on to a level of 11,700 in this move itself. And eventually, possibly before the election results, we could be even hitting a level of 12,000. Because I think this snap out has happened after a lot of hard work, and it's not going to end in a hurry. So any small dip of about 50, 100, 150 points, which can happen at any point of time, I think is a buying opportunity. And the Nifty seems to have created a very strong base or a floor in the 11,000, 11,100 area.
Gautam, the higher beta, would it come via betting on the banks which are looking the strongest or the Nifty, or would you reckon that the broader markets have a higher probability?
Well, Neeraj, that's a very important question because everybody seems to be running after the banks. I think we have maintained all along that the banks would be the first mainline index to hit lifetime highs, and that has happened yesterday. We were working with a target of about 29,000, and it's a humongous rally for the Bank Nifty, 2,500 points in a matter of few weeks. So I think the risk reward is just not justified to be going long on the banking stocks at levels of 29,000. So the first leg of the move is generally led by the stocks which did not do so badly in the difficult times. So if you look at that period when the Nifty was in a 10,600, 11,000 band, the banks actually did very well. The Bank Nifty was absolutely flat, if you remember. And now as the Nifty has snapped out, the banks have been the best performer. But now I think people will realize that there are much better bets in the markets. And I think some of the other sectors might actually take leadership. Not to say that the banking rally is coming to an end. I think our bigger picture target for the Bank Nifty is about 30,500. And we see that coming in the next a few months. But just for the near term, I think there could be some consolidation, even some correction, which is, pretty par for the course given the kind of rally that we've seen. So around 27,300, 27,500, the Bank Nifty seems to have created a nice base for the rest of this year. And keeping that in mind, I think I would be a buyer in banks on some dips. But in that space, I would actually look at the PSU banking space because, they are now recovering at a greater pace. Some nice base building setups we've spotted in the banking space, in the PSU banking space. So that's a pocket that we like, along with some of the other themes in the marketplace.
All right, Hadrien Mendonca of IIFL is joining us on the show right now. Hadrien, good afternoon to you. Let's talk about the index, 11,350 thereabouts. Bank Nifty around 29,000. What would the trades look like?
Yeah, good afternoon, Devang. Yes, definitely the momentum is in favor of the bulls. And if you've noticed, even in today's intraday trades, whenever we saw profit booking trying to set in, in the past half an hour, we have seen Nifty almost recovering all its losses, and even the Bank Nifty, it has been a leader once again even in the intraday trade. So today's rally in the intraday was also led by Bank Nifty itself. So keeping the index trade in mind, I would definitely be along in Bank Nifty, keeping a stop loss of close to 28,900 on the downside. I'm expecting 29,300 levels on the upside. So pure momentum play. One should not miss out on such good momentum. You don't get to see such momentum too often. In the past 6 to 7 months, I think this is the first time such strong move has been observed, and one should not just quit that easily. So definitely a long buyer in the Bank Nifty.
All right, definitely a long on the Bank Nifty. What would the stocks look like then? Would you have a few individual banking names as well? Because you have a list of 3 or 4 of them, which on the Bank Nifty itself have made life highs.
Yeah, so HDFC Bank would be the clear, outperformer for me even at these levels. If you check the weekly charts, it is a clear breakout with huge volumes, if you have noticed, which is actually suggesting that we could see HDFC Bank moving higher by almost 10 to 12% even from these levels. So HDFC Bank should be the top, buying bet from our end. Apart from that, ICICI Bank is also one more stock that is given a 4-year-long multi-year breakout on the weekly charts, and you don't get such breakouts very easily. But when you get, one should not lose the opportunity. Delivery-based buying should definitely be done, keeping a year's perspective in mind. So definitely HDFC Bank, ICICI Bank should be the top bets, in the private bank.
Interesting. Let's watch out for those names as well. Just a quick thought, Hadrien, out here. While we talk about all the gainers and losers, Reliance the last few days has been on a bit of a roll. That's one principal reason why the index has held out or gained in the last few days. How much further do you give to this current uptrend from Reliance Industries?
I think if you're asking me for the short term, there is easily some 30 to 45 rupee upside still left. Now, why I'm that confident? Because again, on the weekly charts, if you see the line charts, we have seen a clear breakout. And such breakouts should not be missed by any trader. In fact, it is a good swing buy around these levels as well. So I think another 30-40 rupees upside on the Reliance Industries is definitely there in the coming weeks or so.
Okay, let's talk about the fundamentals as well. Devang Mehta of Centrum Wealth Management with us on the show now. Devang, good having you. Thanks much for joining in. What's the sense from here on? Is the steam in the mid caps and even the larger names in the banking space taking a bit of a breather? And will it continue moving ahead, or do you believe the rally has been too swift and too soon for the momentum to continue?
Good afternoon, Neeraj. Thanks for having me on the show. I think clearly this is what is called pent-up demand after a long time for a lot I can say good quality as well as great quality stocks. Not necessarily can call the same for the gruesome type of stocks, but I think after a long time, the fundamental factors as well as the factors based on sentiment at the expense of being sounding cliche, but with political factors also being in place and market expecting stability, and with inflation cooling down, with interest rates about to also come down drastically, I think there are all factors which can probably lead this rally to a little more upside. Of course, yes, it's been a little too fast and furious for anybody to digest after being such pessimistic for the last 6-7 months. The market scenario itself was pessimistic in the last 3-4 months. But my sense is, yes, mid cap and small cap valuations had started to look very attractive. The premium that mid caps used to command had come at a discount level. Of course, after this 7-8 days of rally, I can't say that still the discount prevails. But of course, there will be always an appetite for good quality businesses, which I think with the sentiment changing will remain for another at least couple of quarters.
Well, there are good quality businesses even within the IT pocket, and since we were talking about it earlier on, Devang, this period where IT as a pocket seems to be a bit dull. Should one use this as an opportunity to enter these stocks? I mean, you're getting, after that initial brief rally that we saw, as a matter of fact, when the rest of the market didn't do anything and there was a little bit of a risk-averse attitude, safer haven names is where all the money went in, and that's where IT started to pick up. So now that there is this period of lull, would you start looking and picking good businesses from the IT pocket as well?
Yes, I think selectively we would pick good businesses from the IT pack, but if I can classify the entire IT pack as a so-called defensive for 2018, when the broader markets didn't do anything, but all the good businesses from TCS to Infosys came to the fore and started to do very well. I think those times seem to be over. There will be very selective buying which will still happen because people will want to have at least some weight of IT in the portfolio. But I think with domestic demand coming back, with cyclicals, also a lot of cyclicals and capex oriented companies which were more a promise rather than delivery in the last 3-4 years, also seem to be sort of gathering a bit of steam with a lot of data points like capacity utilizations as well as capacities for cement companies, price hikes. I think all these sectors would also have a lot of people interested in just for the sake of valuation as well as for the sake of valuation expansion. So my sense is that IT, yes, you need to be very selective. There will be some candidates who would be more on I can say service side or more on the productivity improvement side, but can't be said that the entire IT pack would do well. Yes, selectively there would be some buys, but more so the market will be focused on the domestic centric themes.
Devang, what in the results season impressed you the most? What sector, what company, what set of companies? I mean, maybe there are 3 or 4 stocks within the coverage universe that you guys have which came out with a blockbuster set of numbers. I'm not looking for a buy or a sell right now. I'm asking you which results looked really impressive to you.
Right. Yeah, so I think a couple of pockets we were very bullish on, and it played out very well. I know that the entire street is right now playing the return of the corporate banks, but we tried to time it a little bit more earlier. ICICI Axis Bank on the back of management changes, plus I think a lot of price erosion as well as valuation erosion was done. At some price it started to look very attractive with cleaning up of books. So we are pretty impressed with the numbers of I can say ICICI and Axis. To play the capex story, you don't have many I can say many businesses where you can convincingly play the infra capex or something like this. But if you play this business properly, you play the entire corporate revival of India. So I think this is one sector which we liked. Another stock which is a mainstay in the portfolio since long, a company like Havells, again just giving an example, a very prime play in our building materials theme where we are still very bullish. So paints, adhesives, building materials like fast moving electrical goods, where Havells, the management commentary was very impressive. There was margin expansion, the numbers surpassed expectations, and the stock even in bad times in the last 3-4 months when the times were a little worse, also did well. So a couple of pockets of, as I said, building materials, some banks is where we found the numbers to be good. Another pocket was company like Dabur, where even 11.5-12% volume growth was recorded, which was sort of I can say windfall. So these companies came out with good set of numbers which are there in the portfolios, and we still would love to ride this.
Got that. Hadrien, if you haven't already answered, what do you view the trade likely to be on a Yes Bank at 250 now?
Yeah, I'm pretty bullish on Yes Bank. In fact, with the disclaimer that we have already, advised a lot of our clients to actually go long on Yes Bank. The first and foremost, importantly, we are seeing that there is a complete turnaround in trend. Secondly, in today's trading session, we are also seeing Yes Bank. It breached its long-term 200-day moving average for the first time in the past 2 to 3 months, and it has also managed to sustain above the same. In fact, now the 200-day moving average of 245 is turning out to be an important support. So keeping that as a stop loss, one can definitely go long on a Yes Bank. We are expecting a target of 260, 265 in the near term.
IndusInd Bank too within that pocket looks extremely strong and has been making big moves over the last few trading days. Currently, is there any idea that you would like to go short on, Hadrien?
Yeah, one of the stocks that look a little weak is Reliance Capital. This is the third consecutive day where we are seeing some kind of bearish move on the downside. And I think Reliance Capital is one stock, if one wants to go and short, can consider. In the short term, you can expect a target of close to 170, keeping a very strict stop loss on the upside around the 178 levels.
Okay, got that. Just want to quickly address a few other stocks within the broader market space as well. And while even NTPC from the Nifty 50 last few days have been quite good and the stock has been on a roll. Last 1 month the stock is up 16% already, and a stock like Indocount, which is up 10% in today's session, 70% over the last 7 days of trade. Today's locked up on upper circuit. Hadrien, do you track this one at all? And even a Himmat Singh Kaseed, that too in the last 7 days is up 15%. Today is up 5% again.
Yes, Indocount, in fact, in the previous week itself, we saw a weekly falling channel breakout. And with the disclosure, we had also, gone long on ICIL, that's the code of Indocount, provided and advised our clients to go long with a swing trade. So I think we've already, exited in terms of the swing trade that I just spoke about. Importantly, what is happening now is that it is hitting its long-term 200-day moving average resistance zone. So I think unless the resistance zone is not broken, I would be a little cautious on Indocount. In fact, the move has been too steep to sustain. We could see some kind of profit booking that could drag Indocount a little lower from here on. So right now, one should not just jump in because of the strong momentum. Wait for some kind of cool off and then try and accumulate Indocount.
Okay, got that. Devang, I want to come to you with the aviation as the pocket. Jet Airways problems just don't seem to end. Another 5 aircrafts that have been grounded, and now the ban on the 737 MAX aircrafts. While obviously this seems to be a setback for the likes of Jet, SpiceJet, this seems to be Interglobe Aviation's gain. Would you play Interglobe Aviation against these two?
I think aviation as a sector is beautifully sort of phased out in India. And the sense here is that almost everybody talks about that it's more now linked to sort of a consumer driven sector where affordability is again the key, and a lot of people now travel by air with load factors and all going gung-ho. The sense here is that the operational cost of a lot of these airlines depend upon, of course, the crude, which is right now at least not playing havoc. But because of the debt issues with a lot of such airlines, there is a sort of, I can say, oligopoly type of a situation where at the expense of one airline which is in problem, the another one sort of gains at least a market share or a temporary market share, if I can say. So yes, Interglobe Aviation for that matter gains in the shorter term or the medium term. But as I said, the sector normally depends upon a lot of factors which are not under their control. So we don't play it more as a holistic fundamentally, but as a tactical bet, we had Interglobe in some of our portfolios. So yes, we play it very tactically, as I said, for 6 months, 1 year type of a call, but not for a 2-3 year type of a fundamental based call.
Okay. If you haven't already covered this, what would your top bets be then from the next 1 to 2 year horizon?
Can't recommend stocks, but on a sector front, I can clearly tell you that the most of our portfolios on overweight positions would be in private banks. That again, some of this retail as well as a combination of, even as I said, corporate banks like ICICI or Axis Bank, to cite examples. Certain NBFCs, of course, the Bajaj Finance or the Bajaj Finservs of the world seem very boring, but again, these are the businesses which have given you handsome returns, and I see no reason why they would not grow at the similar pace. So banks and NBFCs as a pocket is one. Second overweight position is more or less, I can say, building materials with the likes of paints, adhesives, electrical goods, or even companies in the consumer universe. FMCG is one of the sector which we have been very bullish on. Companies like Dabur, companies like Godrej Consumers, company like Marico. So more or less, as I say, it's devoted around these three sectors with a bit of capex oriented plays. We are playing certain alpha plays like I can say 3M India or Honeywell Automation from the MNC companies as well. As I said, don't take this as recommendations. These are some of our portfolio bets which I'm sort of disclosing. You can ask your investment advisor before sort of getting or nibbling into it.
All right, Devang, we'll let you go on that note. Thank you so very much for joining us this afternoon. On to some corporate news. Star Cement has gained more than 5% in intraday trade today after the company has received 115 crores from the central government as claims are made on freight subsidy. Joining us now to talk about this in greater detail is the cement maker CEO, Mr. Sanjay Kumar Gupta. Mr. Gupta, thank you so very much for joining in. 115 odd crores is something that you've received. Are there any more pending subsidies that you're expecting to receive?
See, the total outstanding transport subsidy is around 400 crore with the central government. We have received this part payment of 150 crores. 115 crore is already been credited to our account. The balance of 35 crore we expect to be just within a week's time. So after this, 250 crore will still be left. We hope to receive it by second quarter of next year.
Okay. So what would these, would these monies essentially be used to maybe reduce some debt or pay off dividends or expansion plans? Any thoughts? It's not a small sum, I believe, if the entire amount is put together.
See, this entire fund, so we are a net cash company, so we don't have a debt in the books. We will be using a large part of this fund will get utilized towards our upcoming project, which is a 2 million ton grinding unit, which we are setting up at Siliguri. So most of these funds will get utilized towards creating this capacity.
Interesting. Mr. Gupta, since you are with us and while we have you on this money coming back to you conversation, also important to get a gauge from you as to how is the activity looking like in the markets that you are present in, how prices looking like, and how do you expect the next 12 months to be like? Any light that you can throw here?
See, the market in Northeast has grown at around 12%. As against 8% in the last financial year. So this year, the cement demand was good in Northeast. As far as the East is concerned, including Bengal, Bihar and Jharkhand, the market has performed well. Here, the cement demand has grown at around 10%. In terms of price, Northeast prices have has remained stable with an upward bias. In the East, largely in Bengal, Bihar and Jharkhand, we have seen some movement in the prices in this month. So we have seen approximately a 10 rupees kind of an increase in this market.
All right. Just to get a sense from you, southern-based cement makers are looking at increasing prices on an almost steady basis. We've been seeing, constant updation of prices being hiked down in the south. Is there a likelihood of, an increment pan-India and other companies like yourselves could follow in a big way?
See, as far as the demand-supply situation in the East is concerned, we don't see that kind of price increase coming in. We definitely see that these are all good season demand months, and the month so till June, July, till the monsoon picks up, the demand normally remains fairly robust in these markets. So we may see some kind of an upward price movement, but nothing as compared to whatever has happened in South. We are expecting this, that in coming quarter, maybe till the Q1 for the next fiscal year, the demand will remain fairly robust.
Mr. Gupta, a couple of updates. One, what is your thought on this recent ban of the coal transportation in the northeastern region? Has it already impacted? Does it continue to impact, or do you think it won't have a big bearing?
See, the coal ban is nothing new. The NGT, the rat hole mining ban in Meghalaya is in force from April 2014. It is 5 years now for that particular ban, which is continuing. But there was a good amount of coal which are overground at that point of time. The NGT and Honorable Supreme Court has been allowing transportation of this coal. It is having an impact on us, and we have been able to start sourcing coal from northeastern coalfield and eastern coalfields in auction and fuel supply agreement. We have also started importing coal from South Africa, US via the Hadrien and Paradip port. So we are largely, in terms of supplies, we have started basing ourselves in imported coal and the coal auction.
Okay. Just one more question. I know you just answered my colleague's query on pricing and price hikes. But after this one that you've taken in February, I believe you took one price hike in February. Would you need to, or do you have the leeway to hike prices more before monsoons set in?
See, at this point of time, the demand supply does not support us further price hikes. The costs line is remaining the same. Going forward, definitely there will be cost pressures in view of coal situation which is appearing in especially Northeast. In case there are cost pressures coming from that front, the company would like to pass on that cost pressure if the demand and supply situation favors. Or in the otherwise case, definitely we need to absorb it.
Could you just lastly comment on, how much the improvement in the industry-wide and particularly for yourself capacity utilizations have been? And at your end, aside from this project that you're talking about, where you will be investing this claim money that you have got, any other bigger expansion plans, capacity expansions that you're looking at?
See, within next 12 months, this is 2 million ton grinding capacity which is going to come up. From here onward, we will be definitely looking up or setting up a 2 million ton clinkerization plant in Meghalaya, but that is at least 30 to 36 months from now. We have already started the process of environment clearance. So these are the investment plan for next 36 months.
And what about your capacity utilizations at this point?
At this point, we are operating at 75% of capacity.
All right. And industry-wide is coming in closer at about 80?
Yeah, it would be 80% for industries.
All right. Thank you so very much, Mr. Gupta.
Thank you.
Appreciate you taking out the time. That is the management of Star Cement. They have received 115 crore rupees from the central government as freight subsidy claims, receiving some more in a week to come. The stock is up about 4%.
It's not showing in the stock prices, though, if indeed the industry-wide capacity utilization levels are 80%. The stock prices are behaving as if either the pricing or the capacity utilization or both are starkly lower. I don't know where is the mispricing coming in, maybe due to lower return ratios over the past 5 years or otherwise. But
I think we spoke to the management of another southern-based
India Cements.
We spoke to, and he also was of the opinion that utilizations are moving up. They have crossed about 80%.
Yeah, it's quite interesting with the dichotomy between prices, even though there's been a bit of a move in the last few days. But the dichotomy between prices and stock prices versus actual prices and the capacity utilization levels. Actually, if I can just get one view from Hadrien. Hadrien, you don't look at necessarily only the short-term charts, slightly medium-term charts as well. Which is the best positioned cement stock?
Yeah, so in terms of cement, I think Grasim is the one that's really looking pretty strong. If you see the weekly charts, it is making an attempt to move out of its lower top, lower bottom structure. So I think ideally, if we see the immediate top of 845 being taken out on a weekly closing basis, I think Grasim would turn out to be a good bet, keeping medium term in perspective. On the upside, 920, 925 cannot be ruled out. But only about 845 I would actually trigger along in a Grasim.
Got that. Just stay on with us, gentlemen. Got to take a short break right here. But here out, JP Morgan, they're looking at larger banks in both private and public sector spaces, especially those with adequate capital, deposit franchise, and the organizational ability to lend. Speaking to us earlier on today, Harsh Modi believes banks with better access to growth capital will be in a better position to grow in a more confident manner. Here's a slice of the conversation.
This is a result of a lot of structural improvements over the last few years, especially around asset quality. And getting into rest of 2019 and good part of 2020, the key differentiation what we are looking for is what happens to the capex, fixed asset investment, corporate lending, deposit liquidity in the markets, and that would determine the next stage of move for bank stocks in India.
I just want your sense, within the two pockets, the public sector banks, the deposit are rather more deposit rich. So we are seeing a low credit deposit ratio out there versus some of the newer private sector banks. At what point do you see this, weighing down in terms of overall credit growth for some of these private sector banks?
See, the low credit to deposit ratio at public sector banks were due to two issues. First was they had asset quality problems, and any banking sector, once it gets into asset quality problem, the first reaction is to just tone down lending. So that was one. Second, as they were cleaning up the NPL issues, the capital became less than adequate. And with less adequate capital, they could not grow. So it was a combination. And third was most of the growth in last 5, if not 10 years, has been led by SME and retail, where the private sector banks in India have had a much better reach, distribution, ability to underwrite, and hence lend. So it was a combination of factors. Now what is starting to shift is the capital injection. We had about $7 billion equivalent of capital injection about a month ago on 20th of Feb. Almost $4 billion out of that was for banks, public sector banks and the PCA. So that is helping, and ultimately this should lead to much higher competitive intensity by the public sector banks in India in course of next 12-18 months, if not longer.
Harsh, what have you been telling your clients about what to do with the private banking space? Evidently, the FI flows would have found their way into the private financials, and which shows in the surge that they've had. What now?
So Neeraj, the way we are thinking about our recommendations across the region is we had preferred some of the other markets in Asia, within Asia financials for a while. But within India, what we like are banks with three things. One is adequate capital, either existing capital or access to capital, which is growth capital. Second, but probably the more important one, is deposit franchise. And third one is the organizational ability to lend. So all of these basically mean our recommendations are more focused towards large and liquid banks in the country. This has been our recommendation for a while now.
Wondering if you told some of your large clients to go out and put in fresh money to work in private banks even now, because I mean, I'm just linking the two and two together, the price move and the FI flows being so strong in the last few days. What would your message be to some of your top clients even now after the move that we've already seen happening in the last few days?
Yeah, see, some of the price moves have been impressive, but the starting point for those price moves also means there is still, depending on which name you're talking about, because in India it's very tough to generalize. There's significant differentiation across, even within a particular space, let's say even within private banks or within public banks, within NBFCs, within banks, however we slice it, dice it. So it's not, it's tough to generalize it, but yes, depending on name by name, we do have significant differentiation, and our recommendations are quite nimble and depends on not only the price moves, but also what is the extent of earnings revision that we are going to see, what are the potential regulatory moves, how is the liquidity for the entire system going to evolve, and so on and so forth. So yes, there are certain large and liquid banks which we still like in India despite the moves.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're still with us here on Countdown. 23 minutes left to go for market closing. We're absolutely flat on the indices, though it has been a slightly volatile day. There have been gyrations, but no big swings as such. The Nifty is still just about flat, 11,340. The Bank Nifty making a touch and go at 29,000. It's come off, 28,910 is where it's currently trading at. Let's take a look at what's happening with the rest of the European market basket and how that particular region is shaping up in trade this afternoon. So Europe as a pocket is not doing a whole lot badly. In fact, it's up and about in trade, closer to about 0.5% for the FTSE, CAC up 0.75%, and a similar 0.5% for the DAX. The Dow futures should come up next, and got just 0.1% gain coming in on the Dow futures. With regards to the turnover, the futures and options, the NSE futures and options turnover is slightly on the higher side, considering it's the weekly options expiry. 18 lakh crores already hit. NSE cash stands at about 29,282 crores. Next 20-25 minutes, could expect that to nudge about 32 or 33,000 odd. But moving on then, and while the markets are doing what they're doing, let's find out what has made it to Yatin Mota's list of the Fab 4 stocks for the day. Yatin, good afternoon.
Good afternoon, Devina, and a host of stocks which are active in trade. A lot of mid caps to choose from, but we have taken 4 stocks which are quite active in trade. And starting with eClerk Services, and the board right now has just approved a buyback of 262 crores the maximum price for this tender offer buyback would be at 1,600 rupees per share, 4.5% up for e-clerk services after we have seen the board announce the buyback benefits a lot of retail investors. Laurus Labs also, a pharma stock which is quite active in trade, was as high as 8-9% intraday, has cooled off though. But today morning we had a 5% block deal which happened at a price of 351 rupees per share. And post that block deal, the stock is quite active. And similar is the case with the Jubilant Foodworks. It's March and a lot of block deals usually tend to happen during this period. Jubilant Foodworks also went up 3%, has cooled off again from the day's high. But the promoters are said to be selling, shares in the block deal worth 500 crores. So that stock is also active. And finally, we have Westlife Developers, again from the FMCG pack. That stock is up nearly 10%. Today, the company is meeting a whole host of investors at a brokerage conference, and they also have recently uploaded their investor presentation. And post that, we have seen a strong activity in the stock, 10% up for Westlife Developers.
Wow, 449 and counting. Good going really for Westlife. Yatin, thanks for bringing that to us. You don't normally see Westlife doing what it is doing, but that's a remarkable move. In fact, I don't remember the last time I've seen Westlife up 10%. It's not a very liquid stock nevertheless. I don't remember the last time I saw Westlife up about 10-odd%, 448 and counting. You want to comment on this one before we get to the chart of the day? You want to comment on this one as a trade? Hadrien, Westlife Developers or Westlife Developer, the McDonald's franchisee owner, up about 10% today.
I don't really track Westlife on the charts actually.
Now, I will talk to Mayuresh Joshi about the fundamentals of this one, but before we get that going, time for the chart of the day segment. Indian markets have moved higher over the past few days, and while everyone cheers the recovery in banking names, there's one cluster that's marked its absence in this round, and what's also surprising is that the Nifty IT index was the flag bearer for the numerous rallies. But maybe the currency, maybe other factors all playing out here. Yash Upadhyay has some details. Yash.
That's right, Neeraj. Actually, the Nifty IT index has been falling for the last 5 trading sessions. Today as well, it is down about 0.6%. And with this, we are looking at almost 6 consecutive days of losses for the Nifty IT index, which would be the longest losing streak for the IT index since September of 2017. A confluence of reasons responsible for this. One is the sharp appreciation in the rupee, as well as the strong foreign inflows into Indian equities. The rupee, after starting off as one of the worst performing emerging market currencies, has gained over 1.5% in March alone, turning net positive for the year. Foreign inflows, like I mentioned, hit a record high in the month of February, $2.4 billion of positive inflows coming in, which was again the highest since November 2017. That apart, there are concerns on the fundamental side as well, with the weakness in the healthcare services as well as the BFSI segment due to contraction of demand in the Europe and modest demand growth in America, being one of the few factors which Ashwin Mehta from Nomura highlights in its recent reports. The key reason for the fall in the Nifty IT index has also been the drop that has been seen in some of the index heavyweights. So if you take a look at Infosys, HCL Tech, Wipro, as well as Tech Mahindra, all of whom together contribute to almost 69% of the index, are down anywhere between 2.5% to 6.5% in March. Back to you.
Certainly under pressure, these stocks. Thanks a lot for that, Yash. Rahul Mohindar of Viratech Software with us on the show. Rahul, good having you. Thanks much for joining in. When you stack up charts of select heavyweight indices vis-a-vis the others and then try and look at what the impact they could have on the indices, what do you get? Would IT continue to lag? Can banks do more? And put all of that into perspective, what would a trade on any of these indices be? Nifty, Nifty Bank, or Nifty IT?
Good afternoon. Well, great question, Neeraj. I think at this point, the way I look at it is, yes, the Nifty and Bank Nifty are positive, but I think the fear factor is we've had this last week or two of a solid rally up, and do I get in now? So I don't think this is a point I'd recommend buying right away. On the indices per se, stock selectively, yes, there are several stocks. But just to kind of understand the construction a little better, I looked at a few heavyweights within the Nifty where I see some problems. So when I look at TCS and Infosys, answering your question on technology, they still look negative on the charts for me. So something like a TCS, if it breaks 1975, we should see a fairly good fall come into the stock. something like a Unilever breaking level of 1730, that again could see a good drop. So I'm not particularly, bullish on a lot of the Nifty heavyweights. Yes, the bank Nifty has a better outlook to me. But again, I'd like to second that by saying you're probably better, picking within the mid-cap banks, picking within the private sector banks. I'm looking at stuff like even a Yes Bank at these levels, even an IndusInd Bank or an RBL Bank. I think that's what's on my radar, not really the SBIs and ICICI banks.
Right. Okay. Rahul, your two ideas. You've got a buy call on Yes Bank and you're selling Infosys. Why are you selling Infosys?
Well, let's start with Yes Bank. I think, first of all, the fact that we have broken out and probably will do a closing above 245, that should be a very interesting level, because over the last 5 months, we haven't really been able to sustain such a close. I'm looking at targets of 265 in the near term and about 280 over the next month, 243 being a stop loss I'd buy into Yes Bank. So clearly a breakout situation there with some good volumes. Infosys, as we all can see, has been really lagging behind. The stock has been one of those where, from the mid-February, the stock has really moved down from levels of 765 to 710. I still think there's more to go. 685 is our target on it, and we're looking at selling it with a 720 stop loss to start with.
Okay. Mayuresh, just comment on some of the real estate names right now. I mean, while we've got an upgrade on DLF, target price has been bumped up to northwards of about 220. What's the sense on the rest of the pack now? There has been some participation over the last few months, but it's still not showing in a really big way.
So afternoon, Devina. No, the clear signs that are coming through for the real estate industry or the sector as a whole is that the inventory levels need probably to start getting cleared off. So inventory levels still remain extremely high and buoyant for a lot of players and for a lot of regions. The second element in terms of RERA and the regulator coming in, again, I think what this has done along with the new GST rates, I think the implication thereof will be seen after April 1st. But with the absence of input tax credit, I think there is going to be some amount of uncertainty as far as the end pricing is concerned, though it will be a tad bit lesser than what it was earlier. The affordable players, with the cut coming to 1% on GST, are the clear beneficiaries in the entire conundrum or spectrum of things. But largely, again, I think how many projects are expected to come up is going to be extremely critical. The third element obviously is that companies who probably do not have a land bank, I think the major component of expenses does come through from land. Around 60-70% of the entire structuring or the cost structure for a developer is probably the land acquisition. And the fourth angle obviously is the leverage that they're probably carrying on their books at this point of time. With what we had probably seen in the past, both in terms of inventory built up happening, the liquidity crunch witnessed over the past quarter, that has clearly elevated working capital needs for a lot of listed stroke unlisted corporates as well, putting their balance sheets in despair and cash flows being thrown out of order. Having said that, again, I think in a nutshell, if I probably want to summarize, companies having lean balance sheets, deleveraging is the name of the game. So I think any company who's probably reducing their debt over a period of time with expectations of good cash flows coming through, either through selling off their inventory or the velocity probably getting maintained for any launches that they are doing. And the second element obviously is how much of the land bank are they actually owning up. So in that respect, again, I think extremely selective. I think we continue to hold Godrej properties and to a certain bit Oberoi Realty in our portfolios.
Okay, just stay on with us, Rahul and Mayuresh. It's time now to take a look at what the dealing rooms are recommending this afternoon. Yatin Mehta is joining in with his channel checks. Yatin, good afternoon.
Good afternoon, Devina. A couple of stocks to talk about, and of course there will be pharma stocks also in focus. But before that, we have Kotak Bank. This is one stock which has been range bound ever since we had a block deal which happened few weeks back. But dealers are indicating that domestic funds at current levels are buyers in trade, and in general for the private sector banks, dealers have a bullish outlook. So on the basis of that, this is one stock wherein dealers are recommending their clients to take some long positions. Apart from that, DLF, that is also one stock, 5% up for that one. Not only that, we have the entire realty index, which is quite strong in trade today. And on the basis of F&O trends, DLF is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. And as I was mentioning earlier, pharmaceuticals is one sector which is quite active in trade today. Again, Sun Pharma being one of those stocks, 2% up for that one. And dealers are indicating that at this point in time, a lot of HNIs are buying shares of Sun Pharma, not only in the cash market, but also have been selectively buying options on the long side, which is call options, and also taking some long positions in the future segment.
Right. Yasin, thanks very much for that. So those are some stocks you need to watch out for. Rahul, just comment on some of these stocks trading near the 52-week highs. So you've got a Just Dial, which over the last 2 days has done really well. Muthoot Finance and Gujarat Fluoro. 3 stocks, if you track any of these.
I certainly look at Just Dial quite extensively. I am still looking at an upside on this stock. I mean, let's put some volumes into perspective. If you just take today's volumes and yesterday's volumes, probably in the last 6 months, we haven't had 2 days where we've had such huge volumes come into Just Dial. So it definitely feels a lot more in terms of a breakout. And my own sense is we will finally get past the level of 645, which has been the major block hole for the stock, and move to targets of about 750, 780. And again, this is slightly medium to long term in terms of outlook. So I'm not necessarily expecting a move to happen instantaneously, but a good point to consider holding on with a stop loss below 600 odd rupees for those longer term targets.
Okay. Well, I want to get, actually, before we get in closing strategies, let's first get into closing strategies. Then a couple of these high-flying stocks from select pockets. Firstly, the closing strategies. Hadrien, Mendonca, to you first. Your top closing strategy today.
Yeah, I'll go with the long on Kotak Bank. It has been a fairly underperformer, in the times where the other private banks were completely, blowing the roof off. I think Kotak Bank is finally showing signs of a very good breakout on the daily charts. We are seeing a flag pattern. Volumes are slightly starting to pick up, so maybe we could see some kind of good up move in the near term. So one can consider going long in a Kotak Bank, keeping a stop loss at 1260. You can play for a target of 1285 to 1290 in the near term.
Interesting. Rahul, I know you just gave 2 ideas, but if somebody were to do an STBT or a BTST, is there something else that fits the bill?
I'll give you both actually. I've got one on my mind, which is IndusInd Bank. This stock has really surged up over the last 2 sessions. I think there's an opportunity even now. So I'd look at buying at the current levels of about 1680. I'll keep a stop loss at 1655. I would expect over the next day or 2, we should see levels of 1725. On the sell side, I was mentioning Infosys already. So I'll talk about TCS a little more. I look at selling into TCS, and this time I'm going to be looking at targets of about 1940, and I'll keep a stop loss to that 2000 level mark.
Interesting. Okay. And now, a fundamental view first on 2 pockets, and then we'll try and get in technical views on at least one of them. The fundamental view. Mayuresh, 3 very active stocks. Want to know if you track them and if you have views there. First, Westlife Developer.
Very interesting story, Neeraj, and we've discussed this in the past. The kind of innovations that the management is trying to bring forth on the table, both in terms of menu offerings, the store level changes they're bringing through, and the constrained way in which they're probably opening up new stores by probably allocating capital in the right place. I think they are all strategies in the right direction. So I think the SSG growth that we're probably talking about should probably get maintained at this point of time. So yes, very, very interesting story. I remain probably positive on this one.
Okay, so Mayuresh finds it interesting. You'll be comfortable buying a Westlife versus maybe a Jubilant or something else, Mayuresh?
No, so the valuations are expensive for all these players, Neeraj.
Okay.
But I think if you're holding on to it, I think you should continue holding.
Okay, and then the 2 demerged entities from CESC, Mayuresh, CSC Ventures and Spencer, both of them up and about in the session today, both of them at fresh highs.
No, so I think the retail space, Neeraj, is very, very interesting going forward as well. So I think with the kind of pain points that all these retail players have gone through in the past, both in terms of scaling up their business model in ensuring that they are up to a certain size. At the same time, I think ensuring that the kind of ad spends that they're doing actually generates into a very strong same-store sales growth, as well as generating reasonable amount of EBITDA per square feet. So they've clearly struggled like every other business model and every other company within this sphere in the initial few years. But as the volumes and the turnover starts picking up, both from an inventory side, and you've got a tight control in terms of your overall working capital with receivables coming down, and again I think a reasonable amount of working capital scenario, I think you probably have the right ingredients over a period of time. So I think it's working out for all these specialty retail players. So yes, I think there are good times for them over the next few years.
How do you track these companies? It's recently demerged, so I don't know how much of history is there, and therefore becomes difficult. So same actually to both Rahul and Hadrien, if you can look up the charts, if it is possible, for CSC Ventures and Spencer Retail. Not too much of history, I'm afraid, but maybe you can give a view. Rahul, to you first.
Yes, it's hard to give you an immediate comment, but very quickly, CSC Ventures, again, I'm still fairly positive on the stock. So, given the current scenario, if you're looking at a shorter term outlook, I would be fairly comfortable in saying probably you should still move to about levels of 720 odd levels. So there's still a 100 rupees spread, good percentile spread. Keep a stop loss locked in at 595. That's the only way to go in a stock where you have this little history. So I'm going to move with a stop loss or trail the stop loss and continue holding forward.
Hadrien, what about you?
Yeah, Spencer Retail specifically, has done very well for itself today. And in fact, the 164 threshold, which it managed to break in today's session, has been pretty a strong move that we are seeing. So I think the consolidation of last 5 to 6 days is starting to pay off. And I think in the short run, I really think that Spencer Retail can start moving towards 175, 180 levels. So definitely one should, continue to stay, long in Spencer Retails.
All right. That's from our technical experts. Mayuresh, one last word from you before we let you go. Anything that looks avoidable to you where there is an element of risk that probably this is not the right time to take on?
No, so I'll be a little bit more selective, as I said, over the larger basket in the PSU universe. I think the stocks specifically in the PSU banking space have done exceedingly well. Yes, valuations probably are there on their side. And the kind of numbers that we've seen getting exhibited, specifically on the recoveries and upgrade sides, with capitalization coming in for a few players, a few of the banks getting out of the PCA norms with fresh fund infusion happening from the government side. I think there has to be a gradual improvement in numbers. And by gradual improvement, I mean, I think the advances growth has to be pretty reasonable. At the same time, I think the de-risking in terms of the liability profile also has to be quite good. Again, I think the credit cost structure and what probably happens in terms of the entire stressed out asset, the standard restructured asset, the slippages thereof, specifically in terms of exposure towards the agri/MSME sector, is something to be watched out for. So I think I'll be a little bit more constructive when it comes to the PSU banking universe and still lay my bets on the top guy lying out there, SBI.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts.
Thank you so much.
Well, if the color means anything, we are ending in the green, seemingly ending in the green, still 3 minutes, so you never know. Just about, but it's a very flat day for the markets. Not unanticipated. We spoke about it in the morning. I said this before as well. And not that means that it will turn out to be true, but after so many days of gains, maybe a pause was in order. The broader end of the spectrum and the market breadth wasn't the most positive, keep that in mind. But it's a very flat day again. So 2 days on a trot, flattish day, market breadth negative. Well, let's wait and watch what happens tomorrow. But the volumes today would have surged because of the Nifty Bank and the Nifty weekly options expiry. The cash market volumes might have been a bit tepid. We'll talk about all of that. But first, let me highlight what's happening in the large cap space. NTPC, 3.5% higher. IndusInd Bank, 3% higher. Yes Bank, about a couple of percentage points. Banks have had a diverse range of moves today. Sun Pharma, a couple of percentage points. Vedanta, about 1%. So selectively, some stocks have done well. But a lot of losers today. pretty similar to yesterday. Power Grid 3.5%, HCL Tech 2%, Hero MotoCorp 2%, Tata Motors about 1.5%, Ultratech about 1.5%, ICICI Bank 2 has lost about 1%, Bajaj Finance is down 1%, and Reliance ends in the red. So after some time now, we're seeing the big boy ending in the red in the session today. And despite all of that, a flattish day, so not too bad. The broader end of the spectrum, Devina, selectively stocks may have done okay, but a very lackluster trading day today.
Well, similar, it's a mirror reflection of what the large caps are doing. So even the mid-cap space taking a slight bit of a pause, a breather of sorts after the up move that we've recently seen. For the month of March itself, we've seen about 8 to 10% returns on both the indices. Individual stocks, and I'll start off first with, still they've got a few gainers to highlight, so I'll start off with the gainers first. NBCC, last minute moves coming in there from the counter. The stock's probably going to end the day with gains of about 7% odd. Spurt coming in the last half an hour of trade. Westlife Developers, that stock too is looking extremely strong this afternoon. Aside from that, Indo Count, this is the fourth or the fifth straight day of gains coming in for the counter. It's looking extremely strong. It takes the weekly tally up to about 68 to 70% on the counter. SL Propack, Indiabulls Real Estate, these two stocks are gaining ground handsomely. Gati, DLF, remember, has got at a target price upgrade coming in from at about 220 odd plus, and the stock has been gradually steadily moving up, already above 200. JM Financial, Himmat Singh Kaseed, regular movers on the upside, and Future Life is the other one that's doing okay for itself. Aside from the gainers, the losers, Manpasand Beverages, some profit taking seen on the counter. Remember, this stock too on a daily basis almost has started to move up and taking a pause in today's session. R Power, Arcom, both these stocks, and you've got the ADAG group stocks looking slightly edgy in today's session. Jindal Stainless, you've got Sterlite Tech, while on the fundamental basis you have a lot of recommendations coming in on the buy side. At least for today and the last few days, it's not been all that good for Sterlite Tech. And GMDC, one day where a big spurt came in on an order win, and post that the stock has been continuously in a downtrend. So looking weak for GMDC. That's what we have in terms of the market closing. Taking a look at how the statistics stacked up in terms of the intraday move, the volumes, the market breadth, and just the contributions.
Yeah, the volumes firstly, if we can, the FNO volumes would have looked okay. The cash market volumes perking up a bit as well. Nothing untoward. Pretty much standard Thursday fare.
Yeah. Though the cash market turnover is slightly on the lower side.
Relatively, yes.
Yeah, and rightfully so. The market didn't do a whole lot much in today's session either. Contributions, obviously, you're going to be missing Reliance on the gainer side. On the greener pastures, but IndusInd Bank still, after yesterday's performance, is the top gainer. NTPC actually the last 1 month has been a pretty strong mover, 16% in 1 month for NTPC, which has actually not done anything for shareholders. It's within a range and it just about stays there. But you've seen smart moves coming in on that stock.
You bet. Banks and two heavyweights correct today, ICICI Bank and Reliance. And while none of the IT names kind of make it safe for TCS, that was that front drag, arguably, on the index today.
All right, an even keel there. Market breadth, wouldn't expect much from the market breadth either this afternoon in favor of the bears, but not a big difference as such, or a big gap, so to speak, between the advances and declines either.
Yeah. Anyways, final thoughts from our experts. Hadrien, how does this set us up, if anything, and does it change the trends for the near term?
No, absolutely not in my view. Nothing has changed. In fact, such pauses after a very strong up move is something that is pretty healthy that we are going through. I think these pauses should be good opportunity where one can, re-enter specifically the Bank Nifty because of the strong bullish breakout that we have observed. I think I would continue to remain long on the Bank Nifty, keeping a target of 29,300 and stop loss at 28,900. One more stock that is really looking interesting is Infosys, in my opinion. And if you've noticed in the past 3 days, very nicely we are seeing Infosys not breaching its previous lows and just managing to maintain around the 707, 715 levels. So I think it really merits a buy at these levels, keeping just a 1% stop loss, that is close to 699 levels. One can actually expect the stock bouncing towards the 730, 735 levels. Although this is a pretty contra call and a high risk call, but Infosys, in my view, could be a good bet from here on.
All right, and Rahul had given Infosys as his sell idea. Like Hadrien said, this is a slightly more riskier bet. It's a contra call that he's making because the support levels have not been reached for the counter. Rahul, your closing comments?
Well, I think, yes, the market continues to look in fine fettle, no worries on that front. But a couple of points which I have to flag, which look negative to me and can't go unignored. The pace of the rally has been fairly solid. And you've left a gap closer to 11,200. So if we see some kind of a drop there or a much warranted correction, I would not panic. But again, one has to keep this in mind that you could see corrections, particularly with a stock like Reliance reacting from its key resistance of 1360. I think the second worry is, as I was mentioning, is the IT index. If you look at the CNX IT index, I think we will claw down to closer to its 200-day moving average, which is around 14,800. to 14,850. Presently, just to put it in perspective, we are at 15,250 odd. So I still think there's some good downside visible within the IT index technically. So that's all set up. I would just wait a bit before rushing into a buy position. I think that much warranted correction will probably come before it has its next takeoff. So I think the way I'm going to leave it is look at selling technology for the next 2 or 3 sessions maybe. Look at buying the banking stocks if you get corrections.
All right. We leave it at that, gentlemen. Rahul as well as Hadrien, thank you so very much for being with us this afternoon.
Well, with that, it's a wrap on this leg of Countdown from Devina and me and the team that put this show together. Thank you so much for watching.